Yeah. Good morning. Good morning, Swaminathan. Good morning, everyone. We start off with our revision on Ind AS 33 that deals with earnings per share, right? So I'll be a little fast because we have to cover this. We have only one day, and this is primarily a revision session rather than something that you are already studying the first time. This is something which you are already aware of. So we'll be a little quick in doing the concepts and we can pay more attention to solving the questions. Okay, so with that background, just let us start off the session. Yeah. So now earnings per share, it is primarily a disclosure standard. So it is meant to be disclosed on the face of the P&L, the earnings per share divided into two types, basic EPS and diluted EPS. As we proceed in the session, a few couple of minutes down the line, I'll tell you what is diluted EPS. So that is the thing that we will be disclosing. Now, why EPS is important? EPS is the figure that links the books with the market. Okay, so it is the book earning that you have. It is getting linked to the market price with the help of something known as a PE multiple. So when you take the PE multiple and the earnings per share, you combine that together and that will help you to arrive at the market price or forecast the market price. So this figure is very important from that perspective that it is a bridge between the market and the books that you are presenting, the numbers that you are reporting. So it is a very, very important figure from that perspective. Okay. Now, when we talk about earnings per share, the formula is very clear. In the words itself, it is written earnings per share. So you will be having earnings on the numerator side, number of shares on the denominator side. So if we slightly expand it, earnings amounts to nothing but this is the earnings from the perspective of that class of equity shares, which is subordinate to all other shares, which is subordinate to all other shareholders. That means the last in the queue for receiving the assets at the time of liquidation of the company. From the perspective of those shares, EPS is calculated. So when I convert this whole thing, EPS, into a proper formula, the numerator comes to be net profit attributable to equity shareholders. Which equity shareholders? Those shareholders who are subordinate to all other classes of equity shares, to subordinate to all other classes of shares in issue. So that is your net profit attributable to those equity shares. That is your numerator. Coming to the denominator, it is not a plain number of equity shares, rather it will be a weighted average number of equity shares. Weighted for what? Weighted for time. Weighted for time. Why do I take time as the weighing factor? Because basically the standard seeks to address the fact that there may be a case where funds may not be received for the entire year. You may make a fresh issue in the middle of the year, towards the end of the year. So to bring about fairness in the availability of funds with the entity, they are weighing the number of equity shares on a time basis. On a time basis. Okay, so therefore that is your basic EPS formula. Weighted average number of equity shares in the denominator, net profit attributable to equity shareholders in the numerator. Okay, so your basic EPS is equal to net profit attributable to equity shares divided by weighted average number of equity shares. Are we okay with this? Yes, are we okay? All right, fine. So with that, let us move further. A couple of questions on this concept. I will be moving back and forth. It will not be a linear session. So in that sense, I think we are okay with that, right? So now, sometimes you may have shares which are not fully paid. You may have shares which are partly paid. Okay, so in that event, in the event of partly paid shares, what are you supposed to do? So we can just understand from this example. An entity issues 1 lakh ordinary shares of rupee 1 each for a consideration of 2.5 per share, but you have received only 1.75 per share. So I have issued 1 lakh shares, correct? Yes or no? Now against this 1 lakh shares, how much cash have I received? 1.75. And what is the value of the share? 2.5. What is the value of the share? It is 2.5. So, how much money did I receive? 1 lakh into 1.75. Actually, you have received only 1 lakh 75,000. You should have received how much? You should have received 2 lakh 50,000. So, when I convert it into what you can say proportionate basis, it is as if I have issued 70,000 shares worth 2.5 each. Are you able to understand this? Yes.
Yes, sir.
Number of shares, the requirement is calculate number of shares for the purposes of computing the basic EPS. Yes. So 1 lakh shares, 1.75 each partly paid is the same as 70,000 shares fully paid at 2.5. So for your calculation, you will have 70,000 appearing in the denominator. Are we okay with this? Lavanya, are we okay? Yes. All right.
Yes, sir.
Okay, perfect. Next, let us move on. So that takes care of partly paid shares. Now we shall move on to so example of disclosures. Okay. Now let us move on quickly to bonus shares. Okay. Now bonus. Okay. What do you understand by bonus shares? What do you understand by bonus shares? The shareholders are having X number of shares and they get additional shares without having to pay any consideration. That is effectively your bonus. Yes or no? So, for example, you have so many companies which give up bonus shares now. So, you have, say, 5 shares, and for every 5 shares, you are going to get 1 share. So, now instead of 5, you will have 6 shares. So, that becomes your bonus shares. Now, tell me one thing. Is there any cash element that the company will receive for bonus shares? Answer is no. So, coming to the discussion, tell me if additional cash is not received on issuance of bonus shares, can I presume that the bonus shares were already in existence? Yes?
Yes, sir.
What do you mean
Yes, sir.
already in existence? How does bonus share come into existence? What is the source of bonus shares? Yes. Source of bonus shares is reserves.
Reserves of the company.
Yes, reserves of
Written.
the company. Correct. So, what I do is, in company law terms, I capitalize the reserves. This is known as capitalization of reserves. I capitalize the reserve, convert it into equity shares. And there you have your number of shares increased by the amount of bonus shares. The entry that you will typically be having is reserves account debit to equity share capital. You have some entries in between here and there, but this is the overall effect that happens. Reserves were always present in the equity structure of the company. Yes or no? In the shareholders' funds, you always had reserves. Yes.
Yes, sir.
So, can I say that
Yes, sir.
bonus is also always present?
Yes, sir.
That is why whenever we have to do the bonus shares calculation, the bonus shares will not be generally prorated like how you do for shares against which cash is received. Rather, you will do a bonus adjustment factor, calculating the number of shares as if the bonus shares were always in existence, right? Because the funds are already received right from the beginning, and therefore you will have to adjust the number of shares right from the very beginning of the reporting period. So in that sense, you do the calculation. Okay. So that is all about bonus shares that you have. We'll do a couple of questions. If I'm too fast, please stop me. Okay. If I'm too fast, please feel free to stop me. If I'm too slow, please feel free to speed me up. Okay. All right. So we shall come to this question now. All right. On 31st March 20x2, the issued share capital of a company consisted of rupees 10 crores, that is 100 million, in ordinary shares of rupees 25 each and rupees 5 lakhs in 10% cumulative non-redeemable preference shares classified as equity of rupee 1 each. On 1st October 20x2, the company issued 1 million, that is 10 lakh ordinary shares fully paid. So they are giving a bonus for these shares fully paid by way of capitalization of reserves in proportion 1:4 for the year ended 31st March 20x3. Profit for X1, X2 and X2, X3 is 4 lakh 50 and 5 lakh 50,000 respectively. Calculate the basic EPS for X1, X2 and X2, X3. Okay, fine. Now, how many shares do I have in the capital structure? How many types of shares I have in the capital structure?
Two types, sir.
Two types. So I'm going to calculate EPS from the perspective of which equity share? Am I going to calculate from the perspective of ordinary shares, or am I going to calculate from the perspective of non-redeemable preference shares?
Ordinary shares.
Ordinary shares, absolutely. So that is the perspective you have to follow. So your weighted average number of equity shares will always be the ordinary shares, because that is the class of shares subordinate to the non-redeemable preference shares. Though it is categorized as equity, that categorization comes by virtue of Ind AS 109, where you are treating it as equity because it is non-redeemable. But from the perspective of Companies Act, if we go through section 43 of the Companies Act, you can see that your now share capital is divided into equity share capital and preference share capital. So therefore, you have equity shares being most subordinate to that of preference shares, even if it is non-redeemable. Those strictly under Companies Act, you cannot issue non-redeemable preference shares, but this is an Ind AS that we are studying. So therefore, from that perspective also, your equity shares are most subordinate to the preference shares. Hence, your EPS will be from the perspective of ordinary shares. Okay. Now, these are cumulative non-redeemable preference shares. What do you mean by cumulative? Whether dividend is declared or not declared, you will have to provide for it. Yes, you will have to provide for it. Yes or no? It is every year feature. You will have dividend that gets accumulated. You will have dividend that gets accumulated. Non-cumulative preference shares, you will have dividend at the discretion of the company will be paid to the preference shareholders. Are we able to follow? Yes.
Yes, sir.
So therefore, this profit, 4 lakh 50 and 5 lakh 50, they have just given it as profit. So what we can assume is this is the net profit after tax. From here, we will have to subtract the preference dividend that will be paid or accumulated on the preference shares, right? So you're having profit for X1, X2 as 4 lakh 50,000, and here it is 5 lakh 50,000. You have rupees 5 lakh 10% non-redeemable preference shares. So 5 lakh into 10%, 50-50 preference dividend is deducted. You will have 5 lakhs and 4 lakhs. Okay. So this is your earnings net profit attributable to equity shares. Net profit attributable to equity shares. And this I will have to divide by the number of shares. Okay. Now, number of shares. How many shares do I have for the full year? Rupees 10 crore divided by 25. So how much does that come to?
40 lakh shares.
40 lakh, right? So that comes to 40 lakh shares. Right now, I have also issued bonus shares worth 10 lakh in number. Yes, when is this issued? 1st October 20x2. You tell me, should I take these equity shares from 1st October 20x2 or from the beginning of the period for which the financials are presented?
Beginning of the period, sir.
Beginning of the period. So therefore, though it is issued in this year 20x2x3, it is issued on 1st October 20x2, I will calculate the number of shares right from the beginning of 20x1x2. Yes, because they were not present only in current year, they were also present in the previous year. What will happen is if I only take the working for the current year without adjusting the previous year, what would happen is your previous year's EPS will be higher because numerator is less. Current year it will be lower. So the reader of financial statements will think EPS is reduced in the current period. It was high in the previous period. Why did that happen? Comparability starts getting affected. So therefore, you will not only do the calculation of the current year with bonus shares, you will also restate the EPS of the previous year to incorporate the bonus shares that are issued in the current year. So your number of shares is essentially 50 lakhs. Your number of shares is essentially 50 lakh for both the years. Are we okay with this? Yes? Yes? So therefore,
Yes, sir.
this is the number of shares. So when you divide 500 divided by 5000, you will get 10 paise. And when you divide 400 by 5000, you will get 8 paise. So this is the simple bonus share calculation that you have to do. Okay? All right. Now, that takes care of the first part. Then next one. Calculation of number of shares. Okay, calculation of number of shares. This is done. 1st January, 10 lakh shares are issued. Okay, now 28th February, 2 lakh shares are issued at fair value. 31st August, bonus issue 1 share for 3 shares held. And 30th November, 2,50,000 are issued at fair value. 2,50,000 are issued at fair value. Okay. So, what do we have here is bonus issue 1 share for 3 shares held. That means I had 3 shares. I get 1 bonus share. So my number of shares that will be in issue after the bonus is 4. Are we able to follow? Yes. So therefore, if I have to calculate something known as bonus adjustment factor. What is the bonus adjustment factor? Pre-bonus plus post-bonus divided by pre-bonus. All this is number of shares. So pre-bonus 4 plus, sorry, pre-bonus is 3 plus 1. Bonus plus bonus divided by 3. So this is your bonus adjustment factor. What do I do with this factor? Wherever I am having shares prior to the bonus date, I will multiply that with the bonus adjustment factor. Are you able to follow? Wherever I am having number of shares given prior to the bonus date, you will have to multiply that by the bonus adjustment factor. Are we okay with this? Yes. So now let us try to understand how that works. Okay. See, 1st January to 28th February. This is a period of 2 months. Yes or no? So for these 2 months, I had how many shares? 10 lakh shares in issue. Correct? So 10 lakh into 2 by 12. This is proportion for time multiplied by the bonus adjustment factor of 4 by 3. Are we able to understand this? Yes. Why did I multiply 4 by 3? These shares, 10 lakh, were present before the bonus issuance date of 31st August. That means the bonus shares allocated proportionately to these number of shares are also deemed to be in existence from the first date of the reporting period, that is 1st January. That is why we are multiplying it by 4 by 3. Are you able to follow? Yes?
Yes, sir.
Lavanya, did you follow?
Yes, sir.
Yes. Okay. Sure.
Yes, sir.
Okay. So that is why it
I
is.
just,
Yeah, tell me.
yes, sir. I just tried directly, sir, not this cumulative method.
No problem. We'll do all the
Yes.
possible methods. Okay. So you will have 10 lakhs into 2
Oh,
by 12 into 4 by 3, 2 lakh 22, 222. So this is the first set for the 2 months. Okay. So you start off with 1st Jan, then you have 28th Feb, then I'm having 31st August, then I'm having 30th November and 31st December. We started off with 10 lakh shares. 28th February, another 2 lakh shares. Here I am having bonus and here I am having 2 lakh 50,000 shares. Okay. So we first see the institute solution, then we will look at our solution. There won't be any difference. Any method that you follow, as far as it is logical, reasonable, you get the same answer. Okay. Next, 28th February, I'm having 2 lakh shares issued at fair value. So now how many shares will I have? 10 lakh plus 2. So total number of shares I will have is 12 lakhs. February till 28th February, that means 1st March till 31st August. March, April, May, June, July, August. 6 months into 4 by 3. So that comes to 8 lakhs. Fair enough. Now, 1st September till 30th November. Now the bonus is no longer an issuance item. It is already there in your existence. So 10 plus 2, 12 lakh shares and into 4 by 3. So this comes to how much? You will have 16 lakh shares in issuance. 16 lakhs into September, October, November, 3 by 12. So that comes to 4 lakhs. And last one is 18 lakh 50,000 into 1 by 12. That is 16 lakhs plus 2 lakh 50, 18 lakh 50. So 154. So 15 lakh 76,389. Are we okay with this calculation? Yes.
yes, sir.
So this is one way of looking at things. Okay. The advantage of putting this line diagram is that you will not miss any dates in between. It will be a linear fashion calculation. Okay. So you start with 10, then I have 12, then I have a bonus, Then I have 2 lakh 50 addition. So 10 plus 2, 12 plus 4 lakhs, 16 plus 250, 18 lakh 50. So this is a straight linear calculation. Now, if we look at how Lavanya has calculated, I presume she would have done it this way. She would have taken 10 lakh shares are there in existence for the entire year, correct?
Yes, sir.
So you would have taken into 4 by 3 into 12 by 12. This is the first thing. 10 lakh shares are there for the entire period. So this gives you one figure. The next shares, 2 lakh shares, these are also entitled to bonus, but these are in existence for how many months? These are in existence for 10 months, correct? Is that how you have done it?
Yes, sir. Yes, sir.
Sure.
Yes, sir. But I got answer as 15,87,500.
Let us see why you got 15 lakh 87 500.
Yes.
Okay. And the last calculation is 2 lakh 50,000 shares. No bonus for this into this is in existence for only 1 month. So you should not get different answer. Okay. 10 lakh into 4 by 3 into 12 by 12. So this gives you 13, 33, 333. 2 lakhs into 4 by 3 into 10 by 12. 2 lakh 22, 222. 2 lakh 50,000 divided by 12. 20,833. Yes. So 1333, 333 plus 222, 222 plus 20833. 1576, 388, 389. Same answer. Yes. Where did you make?
Sir,
Yes,
I calculated like 10 lakh shares are for entire year,
correct.
and the addition of 2 lakhs for 10 months.
Correct.
And then I took like 4 lakh shares, sir. Like
For
I did not multiply 4 by 3.
okay, so what you have done is 1 minute. Let me put it up this way then. Okay. So you have taken it as category 1, 10 lakh into 12 by 12. Correct? 10 lakh
Yes,
shares.
sir.
Category 2, 2 lakh shares into 10 by 12. So that comes to how much? 1 lakh 66, 667.
667.
Correct. Category
Yes.
3, bonus shares. You are saying this is there entirely. Correct?
Yes, sir. Yes, sir.
4 lakhs. And category 4, 2 lakh 50,000 into 1 by 12. Correct?
Yes, sir.
So 208.
20,008.
And here you are saying that this comes to 10 lakhs plus 166, 667 plus 4 lakhs plus 20833. And here you are getting 1587, 500. Correct? You
Yes,
tell
sir.
me what is the issue here. Look at this. 4
Bonus.
lakhs is
Here,
for
yeah, here the bonus factor is not considered.
see, not considering bonus factor is totally fine. My question is, you have taken 4 lakh present for the entire year. Yes or no?
Yes, sir.
Problem is, this 10 lakh share is there for the entire year. Correct? So bonus
Yes.
relating to this 10 lakh share should be there for the entire year. Correct?
Yes, sir.
These 2 lakh share, are they in existence for entire period? Answer is no.
No,
So
sir.
the bonus in respect of these 2 lakh shares, how can we take it as present for the entire year? Yes or no?
Sir, but for bonus, we will regard it as present for the entire year, no,
Correct.
sir.
Correct. But the source of bonus shares, bonus is calculated with reference to what? With reference to shares already issued. Yes or no?
Yes, sir. Yes,
These
sir. Now I got it, sir.
Yeah, these 2 lakh shares you had not even received the cash for those shares on 1st January. You received it only on 28th February. So to
Yes,
say
sir. Yes.
4 lakh there entirely does not cut ice, right?
Yes,
So,
sir.
so that is why if you do this proportionately, that means 4 lakh, that is why when you multiply by the bonus adjustment factor, there is no need for you to consider 4 lakh shares separately. Is it okay?
Yes, sir. Here I did wrong in calculating the proportion of shares, right, no,
Yes.
sir?
Yes. Because for 2
Yes.
lakh shares, you cannot assume bonus is there for entire year. Bonus
Yes, sir.
comes into existence for those shares only from 28th February. Correct?
Okay, sir. Got it, sir. Thank you.
Yes. So that is how it is. So yeah, Saminathan is correct. We did not take the bonus adjustment factor, which is fine, which is another way of putting what I have put it already. Okay, which she has understood. Okay. So that is your bonus number of shares calculation. Okay. Anything else that we are left with here? No. So bonus is done. Any doubts regarding bonus? Swaminathan? Yes.
No, no, sir. Very clear, sir. Thank you.
Yeah, okay. Lavanya will proceed to write shares then?
Yes, sir.
Yes, all right, fine. Now, what is right shares? Right shares are shares issued to existing shareholders. So, whenever a company comes out with a fresh issue, first you have a fresh issue, and then a subsequent issue happens. The law requires that you first offer it to the existing shareholders, and if they refuse, you offer it to others. Sometimes you come out with an offer only for the existing shareholders. So those type of shares are known as right shares. You don't have to go to the market. You give preference to the existing shareholders. Now, tell me one thing. Right shares, will they be issued at market price or will they be issued below the market price? Forget the
Below
here.
the market price.
Yes, below the market price. Why below the market price?
Because they are giving preference to the existing
Yes.
shareholders first,
You don't
no,
have
sir.
to make an
Like
effort
there
to
should be
go to
some
the
discount.
market and reach the public. Already, whoever public is there invested in your company, you are giving shares to them only. So, therefore, the obvious option would be that I issue it at a discount. Now, when I issue it at a discount, can I say that? Can I say that there is a bonus component hidden when I issue right shares? Yes or no?
Yes, sir.
There is a hidden bonus cost. There is a hidden bonus component. That bonus component is represented by the discount at which I am issuing the right shares. And that is why, similar to what we calculate as a bonus adjustment factor, we calculate something known as a rights adjustment factor. We calculate something known as a rights adjustment factor. And that rights adjustment factor, we will multiply it for all the shares in issue prior to the date of the rights, prior to the dates of the rights, so that you arrive at the fair value weighted average number of equity shares. And thereafter, after the rights issue, it will be regular calculation like how we saw in the case of bonus shares. Are we okay with this? Yes. Are we okay? Yeah.
Yes, sir.
So now let us do this question which covers the concept. Okay. At 31st December 20x1, the issued share capital of a company comprises of 1.8 million ordinary shares of rupees 10 each. So 1.8 million ordinary shares of rupees 10 each. It means 18 lakh shares. Okay. Fully paid. The profits for the years X1 and X2 amounted to 6 lakh 30, 8 lakh 75,000 respectively. On 31st March X2, the company made a rights issue on a 1:4 basis at rupees 30. The market price of shares immediately before the rights issue was rupees 60. Market price of shares immediately before the rights issue was rupees 60. Calculate EPS. Calculate EPS. Okay. Now, understand this carefully. Okay. See. How many shares do I have?
18 lakhs.
18 lakh shares. So I am issuing one share for every 4 shares held. So this comes to how much? This comes to 4
4
lakh
lakhs.
50,000 shares. Correct? Correct. Is this 4 lakh 50,000 shares at fair value?
No, sir.
No, it is below fair value. Fair value, market price. It is below the market price. So can I say that 4 lakh 50 has a bonus component included in it? Answer is yes. For that purpose, we will have to calculate something known as the rights adjustment factor. How do I calculate the rights adjustment factor? Okay. Now, let us suppose you go through the rights. Okay. Initially, I am having 4 shares, right? These 4 shares have a market value of 60. So what is your total value? 240 rupees, correct? This is the value of shares before the rights. This is the value of shares before the rights. Is it okay? Yes. Then you have one share that is issued on account of rights. What will be the value of that share? 30 rupees. Yes or no? So therefore, after the rights issue concludes, your new holding is 5 shares. And the theoretical value of those shares should be 270 rupees. Are you able to follow this? Yes?
Yes, sir.
So therefore, your theoretical X rights price should be rupees 54 per share. That means if market behavior does remains unchanged, if there are no other external factors, today I am having shares worth 60 rupees. Today I subscribe to right shares in the ratio of 1:4. When I subscribe to right shares in the ratio of 1:4 with the value of right shares being 30 rupees, after the rights issue is subscribed and issued, I will be having 5 shares totally worth rupees 270, individually worth rupees 54. Are we able to understand? Yes.
Yes, sir.
This is known as theoretical X rights price. This is known as theoretical X rights price. Now we calculate something known as rights adjustment factor. Now we calculate something known as rights adjustment factor, which is nothing but market price before the rights issue, that is 60, theoretical X rights price, that is 54. So this is your rights adjustment factor. This is your rights adjustment factor. That comes to, if I simplify it, it comes to 10 by 9. It comes to 10 by 9. Okay. Now, what does it mean? What does this mean? This is important for you to understand. This corresponds to a bonus issue of 1 for 9. When you gave a discount on the shares, when you gave a discount, see, you have 4 shares worth 60 rupees, 240. You gave 1 share for 4 shares at 30 rupees. So effectively, what you are doing is, for every 9 shares that the company is holding, you are issuing 1 bonus share. It is just a simplification of this. Okay. 6 tens are 60, 6 nines are 54. So for every 9 shares, you are issuing 1 bonus. Are you able to understand? Are you able to make the connection? Yes? Yes or no?
Yes, sir.
Sure. If you have any doubt, please stop me. Okay. I will explain it again.
Yes.
Now, 10 by 9, this comes to 1.111. It's a recurring decimal. It's a recurring decimal. What does it mean? It means that you have given a bonus. It means that the market price of shares prior to exercise of rights is greater than the theoretical X rights price. This is the only meaning that can be, because numerator is higher. Numerator is higher means what is higher? Market price before the rights is higher. If this ratio is less than 1, it might indicate that market price has fallen significantly during the rights period. And in such a case, rights issue should be treated as an issue of shares at full market price. So if this rights adjustment factor comes to below 1, there is no bonus component involved. You have to treat it as fully at market price. Okay. We don't have such questions, but definitely you don't know. You could have such surprises that the institute may ask. Okay. Now, with that perspective, this is your rights adjustment factor. Now you will have to calculate the EPS using this rights adjustment factor. Okay. So now, how do I do that? Okay. What is the question? The profit for the year is 6,30,000 and 8,75,000 respectively. And how many shares do I have? 1,800 shares in issue. Okay. Now, for 1,800 shares, I will get 450 rights shares. So after the rights issue, I will have 2,250 shares. Yes or no? This is clear? This is clear?
Yes, sir.
Now this 450, I am further splitting it here. Okay. How? 1,800 shares are in issue. Out of that, bonus issue of 1:9. How did I get 1:9? From here, 10 by 9. That means I will have 10 shares after the bonus, 9 shares before bonus. So for every 9 shares, I am issuing 1 bonus share. So that means this 200 is nil consideration. Are you able to follow? Yes. Out of 450, 200 shares are issued similar to bonus shares. The remaining 250 is at full value. The remaining 250 is at full value. Are you able to follow? Yes? Sure? Swaminathan, Lavanya, are you able to follow or not able to follow?
Yes, sir.
Sure?
Yes, sir.
Okay. So this is how the interpretation of rights issue works. Okay. Though I have issued 450 shares at 30, the understanding or the interpretation is it is equivalent to 250 shares at full price, 200 shares bonus. That is how you interpret. Okay. The shareholder is therefore indifferent as to whether the entity makes a rights issue of 1 for 4 at 30 or a combination of bonus of 1 for 9 followed by rights issue of 1 for 8 at a full market price of 54 per share. So this is how you do the interpretation. All right. Now, when I calculate the weighted average number of shares, how do I do that? See, for the previous year, see, in the previous year, I am having 1,800 shares, correct? This is right from the beginning of the reporting period, yes or no? And I'm also going to get bonus. So can I say that 2,000 shares were there in issue right from the beginning of the period? Yes or no? Yes or no?
Yes, sir.
So your restated number of shares is 2,000 thousands. That means 20 lakh number of shares. Now, when I talk about current year, you can look at this. 1.8 million. This is the number of shares that you had, 18 lakhs. This, when is the rights issue happening? The rights issue is happening on 31st March 20x2. That means Jan, Feb, March, 3 months. Okay. So 18 lakh into 3 by 12 for 3 months into 10 by 9. Because this is before the rights issue, whatever shares are there, we multiply by the rights adjustment factor. So 5 lakhs. And 2.25, this is the total number of shares after the rights. How did I get 2.25? 1800 plus 450, 2.25. So 22 lakh 50,000 into 9 by 12 gives you 1687,500. So 21 lakh 87,500. Are we able to understand this? Yes? Are you able to follow? Number of shares? Yes.
सर हमने बोनस एडजस्टमेंट फैक्टर क्यों नहीं लिया है इस केस में?
बोनस एडजस्टमेंट फैक्टर लिया है ना बेटा यहाँ पे 10/9.
इन द प्रीवियस ईयर नहीं लिया जाएगा?
प्रीवियस ईयर भी तो ले लिया ना ऑलरेडी. सी, शेयर्स कितने थे? 18 lakhs, करेक्ट? इतने
Yes.
शेयर थे अपने इश्यू में. यस.
Yes sir.
And when I multiply this by 10/9, ultimately क्या हो जा रहा है? 20 lakhs हो जा रहा है ना? Yes? Yes or no? You take 18 lakhs into 10/9, that comes to 20 lakh shares, na?
Yes sir. Yes.
तो 20 लाख ही तो लिया है हमने यहाँ पे, है कि नहीं? Yes. Only thing is it is presented differently. It is shown as 18 plus 2. You could have done 18 into 10/9. That is also fine. Is it okay?
Okay.
Okay, Karthik. Yes, Shailendra, did you follow?
Yes, sir. Yes, sir. Thank you.
Yes, sure. Please stop me, okay? If you are stuck somewhere or if I'm going fast. Okay, because this is the only thing that they can confuse you as far as this stage is concerned. Diluted EPS, the confusions will multiply. Okay, but basic may the only complicated portion is rights issue. That's it. Okay. Now, you had profits of 8,75,000 and 6,30,000. Previously, you had taken 18 lakh shares in issue. This was reported EPS. Okay. 35 paisa is your reported EPS of last year. Current year, 8,75,000 divided by 21,87,500, it comes to 40 paisa. Are these two comparable? Answer is no. because of the bonus component. So what do? You will have to compute the restated EPS using 20 lakh as your number of shares. So in current year, you will report these two figures, 40 paise for the current year, 31.5 for the previous year. Are you able to follow? Swaminathan, Shailendra, Karthik, Lavanya, all clear?
Yes, sir. Clear, sir.
Yes?
Yes, sir.
Yes.
Sure?
Yes, sir.
Anybody having slightest discomfort? No discomfort? Yes. Lavanya, all clear, beta?
Yes, sir.
Yes. Okay. So that takes care of rights issue. Okay. All right. Fine. Let me see if I can open up some prior data just to help you out. See, I had done this one for an actual rights issue that was issued. Okay. I have done so that you can understand how it actually works in real life. Okay. I'll just show that to you. So you will be able to understand. Okay. And that is one. And there is one more that I'll just open up for you, which is
Sir,
yes.
uh, in case of bonus computation in rights issue, can we do this way, sir? Like 4 lakh 50 shares we got for 30 rupees. That is total proceeds divided by X rights price. From that, we can get the
Correct.
bonus.
Correct. Yes. Yes, absolutely.
Yes,
So you are
the way
saying,
we,
yeah, total proceeds you have received 4 lakh 50 into 30 rupees. That
yes,
you
sir.
will divide by the X rights price. Differential, you will take it as bonus. That is also
Bonus issue.
totally fine.
Yes, sir.
Yes, perfectly fine.
Yes.
Yeah. So if you want, you want me to run you through a real life case or we proceed further?
Sir, please run, sir.
Okay, fine. So there was this company EIH Limited that came out with a rights issue. Okay, so first let us look at the overall calculations. Okay. Means we have to look at 10,000 pages here. One bit difficult. Okay. See, we are looking at year 1920, right? We are looking at the year 1920, previous year 1890. Okay. Now, net profit attributable to equity shareholders. Just a minute. Okay. Yeah, here it is. For 1920, your profit is 1,244.67 million, right? So 1,244.67 million divided by weighted average number of equity shares, 571569,414. This is the previous year balance sheet. Okay. So in your previous year balance sheet, you had number of shares as how much? 571,569,000. Okay. So the reported EPS is 2.18. So far, are we clear? Yes. So far, are
Yes,
we clear? No
yes, sir.
doubt. Okay. Now we move
Yes, sir.
on to the main point. The rights issue happened in 2020, 2021. Okay. This was, see, EIH is a company that is into hospitality. Okay. 2020, 2021, I hope you guys are aware, we went through COVID, right? So that time the hospitality industry was totally gutted down because of lockdowns, no travels, bans, etc., etc. So they needed some funds to meet their obligations. So for that reason, they came out with a rights issue on 20th October 2020. Okay, now what are the terms of rights issue? Let us look at that. Okay, page 65 it was telling. Right? Page 63 of annual report. Yes. You can see this raising of capital by rights issue. During the year, the company raised capital by issue of further shares to eligible equity shareholders. What is the rights ratio? 8 shares for every 85 shares held. Okay. So in our question, in our facts, these were the number of shares in issue. Correct? 57 lakhs, 57 crores, 15 lakhs, 69,414. Is it right? So against 85 shares held, 8 shares are issued as rights. That means total right shares that you are issuing is 5 crore 37 lakh 94,768. So therefore closing number of shares in which balance sheet? 31st March 2021. Your number of shares should be 62.54 crores. Are you able to follow? Yes? You're able to
Yes,
follow?
sir.
So
Yes,
if I
sir.
look at 31st March financials in the equity column, yes, here you can see 571, 569, 414 plus rights issue. So your total number of shares after rights issue is 62 crores 53 lakh 64,182, which is exactly what we have also calculated. Now, coming to the next interesting part, EIH is a listed company. So it will have its prices appearing on the markets. Okay. These are the actual prices which I have taken from the markets, okay, as on the respective date. Rights offer opened on 29th September 2020. On that date, the market price was 81.85. Rights offer closes on, that is the last date for exercising the rights was 13th October 2020. On that date, your market price was 76.2. So when we look at X rights price is what? We calculate theoretical X rights price. Yes or no? We calculate using the market price just before the rights date. So which date are you going to take? So you are going to take the market price on the date when the rights offer closes. On that date, the market price was 76.2. Allotment date was 20th October. I am not interested in that for the purposes of X rights price. Record date, I am not interested. These are secretarial dates. You need to take this for allotment, for record date, for the date prior to the record date. Those are the things that you are going to consider. But for my rights factor, I will take 76.2. Are you able to follow? So my X rights price, theoretical X rights price, 85 shares into 76.2 plus 8 shares into 65. This is the right shares issued at 65 each. They have given in that director's report we have seen. Divided by 85 plus 8. So your theoretical X rights price comes to 75.24. Are you able to follow? Yes, exactly what we have been doing. Yes or no? Anything
Yes, sir.
different?
No, sir.
No different, right? So rights adjustment factor is fair value before the rights, that is 76.2. X rights price 75.24. So rights adjustment factor comes to 1.01281. This is your rights adjustment factor. Okay. You can see here. From the rights, how much money did you get? It is nothing but number of right shares 537, 94, 768 into 65. This is the money. They have collected how much? 349.67 crores. Almost 350 crores they have collected. So 350 crores at an X rights price of 75.24, you have issued at fair value actually 464.75. But how many shares are actually issued? 537.95. So therefore, the bonus component is 73,19,225. I think this is what you were asking, Lavanya. Can you calculate the bonus in this manner, right?
Yes, sir. Yes,
You
sir.
can calculate, no problem.
Yes.
So your bonus component is 73,19,225. And when I calculate the EPS, when I calculate the weighted average number of equity shares, I will take allotment date as my cutoff for weighted average number of equity shares, because from allotment date, the shares have come into your capital structure. So therefore, till 19th October will be based on prior. From 20th October, the rights issue are already in existence. So therefore, if I have to calculate, it is number of shares prior 57, 15, 69, 414 into 1.01281 multiplied by, obviously this is in the middle of the year, so we have taken it on the basis of number of days, 202 days. You can calculate from 1st April till 19th October, it comes to 202. And balance will be 163 days. Here no rights adjustment factor because this is based on the number of shares. So after considering this, the total number of shares is 59 crore 96 lakhs, which we are considering as weighted average number of equity shares. Are you able to follow? Yes? Sure? Yes or no?
Yes.
So your reported weighted average number of equity shares will be 59.96 crores. Because it was a COVID year and this was the hospitality segment, it has made a loss. It has made a big loss in this year, which amounted to, where is that? Standalone balance sheet. Yes. profit or loss for the year. 3431.24 million. 3431.24 million. So your reported basic EPS is minus 5.72. This is for 2021. When I look at 1920, do I have to do a restatement? Answer is yes. How do I do a restatement? Take the same net profit, but here what I will do is I am adding the bonus component. I am adding the bonus component. So 57.15 crores plus 73 lakhs. When I add this, it comes to 57.89 crores. When I divide this, I will get 2.15 as my restated EPS. Are you able to understand this clearly? Yes,
Yes, sir.
everyone? Yes.
Yes, sir.
So this is how you actually do this. Okay. So that takes care of your rights issue also. So now moving on to the next part. We come to diluted EPS, or before that, we'll take up one more simple new concept, which is new in the sense it is for this particular Ind AS. Okay. Yeah. Okay. Participating preference shares. This is an appendix to Ind AS 33. What do you mean by preference shares? Ideally, they are the shares which get some dividend. It may be cumulative, it may be non-cumulative. They get preference over equity shares at the time of distribution of assets. In addition to this, you may be having certain preference shares where they also have a right to participate in the undistributed profits. They also have a right to participate in the undistributed profits. That is the way you are going to have the rights assigned to these preference shareholders. Okay. So in that particular case, how do I have to calculate the EPS? We'll just look at that. Okay. So now coming to this question. Okay, fine. An entity has two classes of shares in issue. 5,000 non-convertible preference shares, 10,000 ordinary shares. The preference shares are entitled to a fixed dividend of rupees 5 per share before any dividends are paid on the ordinary shares. So from the total available profits, 5 rupees per preference share goes to the preference shareholders. So can I say that this has to be deducted when I arrive at net profit attributable to equity shareholders? Can I say that?
Yes,
Yes.
sir.
Karthik, Shailendra, agreed? This is a distribution that needs to be made to the preference shareholders, right? ठीक है?
Yes.
Yes. Ordinary dividends are then paid, in which the preference shareholders do not participate. So from total profit pool, first you will have preference dividend. वो चला गया, you have some profits left. From those profits, you pay equity shareholders. In that distribution to equity shareholders, preference shareholders will not participate. Obviously, कैसे करेंगे? उनको तो पहले मिल चुका है. This is only for the equity shareholders. Obviously, preference shareholders will not participate. The balance which is left, what they are saying now, each preference share then participates in any additional ordinary dividend above rupees 2 at a rate of 50% of any additional dividend payable on an ordinary share. Entity's profit for the year is 1 lakh. Dividends of 2 rupees per share are declared on the ordinary shares. Compute the allocation of earnings for the purpose of basic EPS when an entity has ordinary shares and participating equity instruments that are not convertible into ordinary shares. Okay, so this is the question. Okay, now let us look at this. What is your profits? This is illustration 15. Profits before any distribution. What is that profit? 1 lakh. Correct? We start off with 1 lakh. Then I have less preference dividend. You remember 5 rupees per share? Rupees 5 per share into how many preference shares do I have? 5,000 non-convertible into 5,000 preference shares. So that comes to 25,000. Yes or no? So this is the balance that is left, 75,000. Now out of this 75,000, is this going to be shared with both equity and preference? Answer is no. From here, equity dividend will go because that is only to equity shareholders. Less equity dividend. That is rupees 2 per share into 10,000 equity shares. So that comes to 20,000. So here I am having 55,000. What is this 55,000? This we call it as undistributed profits. Undistributed profits. Okay. Now, when we talk about this undistributed profits, who is having a right on these profits in this question? Who is having right on these profits in this question?
Both equity and preference holders.
Agreed? Yes, Swaminathan, Shailendra, Karthik, agreed? Both equity and preference shareholders have a right on this profit. Yes?
Yes, sir.
Right.
So now, when I have to calculate my basic EPS, it will be with reference to both the shareholders. Now, how do I calculate? Let us assume that 55,000 is notionally distributed. Let us assume that 55,000 is notionally distributed, assuming that the profit for each ordinary share is rupees X. That much he will get. Okay. So in case, assuming rupees 55,000 is notionally distributed, let share of each ordinary share be X. And let us look at the question. Each preference share then participates in any additional ordinary dividend at a rate of 50% payable of that which is payable on an ordinary share. Above rupees 2. 2 rupees we set aside what is to be paid to equity shareholders. Beyond that, whatever equity shareholder gets, 50% of that preference shareholder will get. Therefore, allocation to each preference share is equal to 0.5x. Are we able to understand this? Yes? Any doubts? All clear? Till now you have understood this? This is
Yes,
only
sir.
an, this is only an equation. Now this is only an assumption. Now we frame it into an equation. I have 10,000 ordinary shares. Each of these shares will get X rupees dividend on the undistributed profits. I have 5,000 preference shares. Each of these guys is going to get 0.5x. This together becomes equal to 55,000 rupees. This is the undistributed profits. So when I solve this, I get 12,500x is equal to 55,000. Therefore, x is equal to 4.4. X is equal to 4.4. So obviously preference share will be 2.2. So now if I have to calculate the basic EPS, it will be done like this. Equity shares, preference shares will be in rupees. Distributed profits. What we started off with was 1 lakh. Yes, in that 1 lakh, equity shareholders are getting 2 rupees. Preference shareholders were getting 5 rupees. The first thing, 5 into 5,000, 25,000. Undistributed. Undistributed equity is getting 4.4. Preference is getting 2.2. So this comes to 6.4 and 7.2. This is your basic EPS. Sir, how do we cross check? Because we started off with profit of 1 lakh. So let us multiply that by number of shares. Number of shares 10,000. Here 5,000. So when I multiply this 10,000 into 6.4, 64,000. 5,000 into 7.2. So this gives me 36,000. When I add together, it comes to rupees 1 lakh, which is the profit. Are you able to understand this? Yes? Sure?
Yes, sir.
So your basic EPS that you will give as the answer is for equity shares, it is 6.4. For preference shares, it is 7.2. Karthik, Shailendra, are we clear?
Yes, sir. Clear.
Okay, all right.
Sir, can you please show the question once?
Yes, yes, of course.
Sir, here
Yes,
it is mentioned like dividend about 2 in that 50%, no, sir. Like
yes, yes.
here, if undistributed profits ratio is 4.4, above 2 is 2.4, no, sir. In that
No, no,
50%,
no,
is it
no.
not like?
See, 1 minute, 1 minute. See, in this 2 rupees I have already removed, na? See, I started with 1 lakh. First of all, preference dividend went at 5 rupees per share. And then equity to ordinary shareholders, I have removed this 2 rupees. So there is no 2 rupees now. It's already shared. It's already distributed to equity shareholders. So what is left is this undistributed profit of 55,000. In this 55,000, every preference share then participates in an additional ordinary dividend above rupees 2. So 2 rupees we set aside. So out of that 55,000 rupees, participating is at a rate of 50% of any additional dividend payable on the ordinary share. You're able to follow?
Yes, sir. Yes, sir. Now I got it, sir.
So that 2 is removed out. We scoped it out before. Okay. Yeah.
Okay, sir.
Okay. Yes. So I will leave you with this question, not this one. Yeah. We had one more question, I suppose. But there's only one they have to. Okay, fine.
Sir, if nothing is declared for equity holders, then we have to consider that too also, no, sir, in
No, no,
calculating.
no. Two, if nothing is declared, then that 2 rupees also will not have been given in the question. Okay, means They
Yes,
say
sir.
odd.
When considering undistributed, we have to include these two also, no, sir,
No, no,
in
no.
that.
1 minute.
I'm
You have to
allocating.
include this two also. Yes.
Yes, sir.
So
Yes.
when they say that, yes, if this is not there, then this also would not be there. Okay. This also would not be
Yes.
there. This also would not be there. On entire 75,000, you do the distribution. Okay.
Yes, sir. Means on
Got
that
it?
entire 75,000, we need
Yes.
to take 50% for preference of it.
50% for you take X. The equation will come to same equation 10,000x plus 2,500x is equal to, it will become 75,000, and then you do the solving. Is it okay if that 2
Yes,
rupees
sir.
is not given? Yeah.
Yes.
Okay. Anything else? Nothing else. So we move further. Okay. So that closes our discussions on basic EPS. We then move on to something known as diluted EPS. What do you mean by diluted EPS? Basically, this is the EPS which is a future looking EPS. What do you mean by a future looking EPS? You are having in your capital structure certain instruments which are in the nature of equity, but they can get converted into equity only in the future. Basic EPS is based on all the facts that have happened till date. Diluted EPS takes the same earnings that we have earned, does the adjustments relating to those instruments which have a potential to be converted into equity in the future. So based on those assumptions or based on those calculations, we do arrive at a figure which is known as diluted EPS, which is known as diluted EPS. Key point to remember, diluted EPS should always be lower than basic EPS. If it is not, then your basic EPS will be equal to the diluted EPS. You can say that there is no diluted EPS or there is no dilution which is happening. Therefore, diluted EPS is kept the same as basic EPS. Many companies which do not have any potential equity share obviously will not have any dilution also, and therefore basic EPS will be equal to diluted EPS. Are we able to follow? Yes,
Yes,
sure.
sir.
So, what are the example of potential equity shares? Well, you could be having convertible preference shares. You could be having convertible debentures. You could be having employee stock options or just options or warrants. Or you could be having something known as contingent shares. You could be having something known as contingent shares. Okay, so 4 things are common that you will be having: convertible preference shares, convertible debentures, options, warrants, or contingent shares. So these are the 4 things that you will be having. Are we able to follow? So now with that background, you will have to do the adjustments when you are calculating potential EPS in the future. Whatever be the impact of conversion of a particular instrument into equity in the future, you will have to give the impact to the profits also accordingly. Okay. For example, if I assume my convertible debenture gets converted into equity shares in the future, then the savings in interest will have to be factored as your earnings addition. And not only savings in interest gross, it has to be net of taxes if a tax rate is given, because on that interest, you will be subjected to tax. Are we able to follow? Yes. So we look at one question that gives us these adjustments to profits, which is there on account of diluted EPS. Okay. Yeah. Entity A has in issue 25,004% debentures with a nominal value of rupee 1. The debentures are convertible to ordinary shares at a rate of 1:1 at any time until 20x9. The entity's management receives a bonus based on 1% of the profit before tax. Entity A's results for 20x2 showed a profit before tax of 80,000, profit after tax of 64,000. For simplicity, a tax rate of 20% is assumed in this question. Okay. So now calculate earnings for the purposes of diluted EPS. What is your profit before tax? 64,000. 64,000. Profit after tax 64,000. Now, this is my starting point for diluted EPS. How do I calculate? Well, if I convert these debentures into shares, will I be saving interest on that?
Yes, sir.
Yes. So that saving I will have to add back 25,000 into 4%, 1,000. Okay. Now, if I save interest, will I pay more tax?
Right.
Right? So
Yes, sir.
1,000 into 20% minus 200. Yes. Now, if I increase interest, can I say profits have gone up? Yes. And if my profits have gone up, can I say that management bonus at 1% profit before tax, can I say that that also will get added? Yes or no? Yes. Profit is going up. So can I say management remuneration also will go up?
Yes, sir.
Yes or no? Yes. So increase in management bonus will be an expense for the company. So minus 10. And because you are increasing the bonus, can I say that your tax benefit also you are going to get? Yes.
Yes, sir.
So therefore, when I do all these additions, 64,792 will be the profits that you will consider for the purposes of diluted EPS. Are we okay with this?
Yes, sir.
Karthik, Shailender,
Yes, sir.
Ishant, yes? Or
Yes, sir.
okay. Only one thing is there. Here, we do not take any uh, convertible debenture as liabilities and equity, okay, as required by Ind AS 32. So that is not considered. We have done a straightforward calculation because here the intent is not to deal with financial instruments. It is to ensure you get your Ind AS 33 concepts strong. Okay. So that closes illustration 7. Fine. Next. Okay. Illustration 8. Can you do illustration 8? Let me see. Do question 8.
Sir,
Yes.
incremental earnings per share is 0.395.
Yeah. So quite simple. Yes. So ABC has 1 lakh rupee one ordinary shares and 1000 rupees 110% convertible bonds issued at par, each convertible into 20 ordinary shares. So 1000 bonds can be convertible into 20 ordinary shares on demand, all of which have been in issue for the whole of the reporting period. ABC's share price is 4.5 per share, earnings are rupees 5 lakhs, tax rate is 21%. Calculate basic EPS, earnings per incremental share for convertible bonds, and diluted EPS. Ignore the requirements of Ind AS 109. Okay. Basic EPS. I have 1 lakh shares and I have profit of 5 lakhs. So 0.5 per share. Earnings per incremental share for the convertible bonds. How do we calculate? Number of bonds 1000, face value 100, nominal value 10%, interest cost, obviously you will give the tax effect into 1 minus 21%. So that gives you 7,900. Are we able to follow? Yes.
Yes, sir.
Others, boys, Swaminathan, Shailendra, Karthik.
Yes, sir. Got it.
Yes, sir.
Okay. And assume, you have to assume that all the bonds are convertible. Okay. So this gives 1000 into 20, 20,000 shares. So 0.395. This comes to 0.395. Are we okay with this? Yes. So when I talk about diluted EPS, it starts off with basic EPS 5 lakh plus 7,900 divided by 10 lakhs plus 20,000, 0.498 per share. Is it okay? Yes. Fairly simple. No doubts. So that takes care of this also. Okay. Next. Okay, fine. We take a break now for 10 minutes and then we shall look at options and warrants. Very simple. And then we shall move on to presentation and contingent shares. Is it okay? Yes. Karthik, Shailendra, Lavanya.
Yes, sir.
Yes.
So are you guys able to
Yes, sir.
understand? This is something you have already done. It's not something new, right?
Yes, sir.
Okay. Okay. So take a 10-minute break. We shall meet again. Okay. All right. Break, please. Okay. We move on to the next one. We are done with diluted EPS. We have kind of given the basic understanding. So now we move on to, mm, do we do another question or see that one? Oh, fine. Now we have something known as options. You know what are options or warrants? Yes.
Yes, sir.
Yes. So there is basically an option to purchase the shares of a company if certain conditions are met. So can I say that options constitute potential equity shares? Can I say that options constitute potential equity shares? Yes. So
Yes.
therefore, should their impact be considered when we calculate diluted EPS? Answer is yes, because at some point of time in the future, they will be converted to shares. They may be converted to shares. Okay. So that is the reason you will have to treat it accordingly. All right. Now, when we look at debentures, convertible debentures, ordinarily, when I do the effect of dilution, what do? We consider the interest saving that will happen. Yes or no? We give it for the tax effect and we add it to the net profit, because if the if the debentures get converted into shares in the future, the interest cost is something that you will end up saving. Yes or no? Yes or no? So therefore we
Yes.
consider that. But in the case of bonds, is there any such impact? Answer is no. There is no such impact that is possible. Yes. And therefore, there is no adjustment to the numerator. Only adjustment will be there to the denominator. Only adjustment will be there to the denominator in terms of additions to the number of equity shares. Addition to the number of equity shares. Are we okay with this? Yes. Lastly, when you have multiple conversion options, which option should you select? You should select that option which gives maximum possible dilution, because that is the worst case scenario. That represents the worst case scenario in references of EPS, because maximum dilution means maximum number of shares. Maximum number of shares in the denominator. So higher the number of shares in denominator, more will be the dilution. So the impact should always be focusing on highest possible dilution. So if you have multiple conversion terms, select those conversion terms where the dilution is maximum, where the dilution is maximum. Are we okay with this? Yes. So with that, let us move on to the questions that are there. Okay. At 31st December 20x7 and 20x8, the issued share capital of an entity consisted 40 lakh ordinary shares of rupees 25 each. The entity has granted options that give holders the right to subscribe for ordinary shares between 20y6 and 20y9 at rupees 70 per share. Options outstanding at 31st December X7 and X8 were 6,30,000. No grants, exercises or lapses. Profit after tax is 5 lakh and 6 lakh respectively. Average market price of the share is 120 and 160 for years 20x7, 20x8. Okay. So now let us work on this. Yes. See, how many options am I having? 6,30,000 options. Yes or no? Correct?
Yes, sir.
Yes. 6,30,000 options, they will pay 70 rupees on conversion. Yes or no? That means for a share whose value is worth 120 rupees, they are going to pay us 70 rupees. Correct? Do you agree to this? Tell me.
Yes, sir.
Yes. Because subscribe at rupees 70 per share. So can I say that there is a bonus component involved here? Can I say that there
Yes,
is
sir.
a bonus component involved here?
Yes, sir.
What is the bonus component is very easy. 6,30,000 into 70 divided by 120. How much that comes to?
3,67,500.
3,67,500. That means you have received cash equivalent to only 3,67,500 shares in fair value terms. Yes or no? But in return, how many shares are you getting? 6,30,000 shares. Yes or no? So what is the difference? The difference is nothing but
262,500.
2,62,500. Yes or no? This is the bonus shares that you are going to get. This is the bonus shares that you are going to get. Correct? Yes or no? Karthik,
Yes, sir.
Shailendra, Swaminathan, Lavanya, all clear?
Yes, sir.
So when the option holder will subscribe to this option and pay 70 rupees for 6,30,000 shares, it will amount to issuance of 2,62,500 bonus shares. Correct? And these bonus shares are what you are going to consider for the purposes of diluted EPS. You will not consider 6,30,000 entirely. No, no, you will not consider 6,30,000 entirely. Because 6,30,000 ke samne you are going to get money. You are going to get money. So you have to consider only those shares where there is no monetary element involved. Where there is no monetary element involved. Yes or no? Bolo.
Yes,
Yes.
sir.
In the case of convertible debentures, on conversion, am I going to get money for that? In the case of
But
convertible
just
debenture,
monetary
No, sir.
consideration have to do, मतलब हमें शेयर्स तो इशू करने ही पड़ेंगे ना फ्यूचर में उन शेयर्स पे हमारा प्रॉफिट भी अ, बटेगा
but
तो
but आप आपको शेयर्स इश्यू करने पड़ेंगे. कितने इश्यू करने पड़ेंगे? 6,30,000, राइट? इन दिस केस. ओके,
यस
इन दिस केस. But 6,30,000 ke samne, you are getting money in the future, right? See, understand, when I look at diluted EPS, I am counting those instruments जिसके सामने फ्यूचर में पैसे नहीं आएगा. You will not get money in the future. Yes, in the case of convertible debentures, in the case of convertible preference shares, will you get money at the time of conversion?
नो सर
No. Clear about that, everyone? You have received the consideration upfront when you have issued or when you have subscribed to the convertible debentures or convertible preference shares. So therefore, you will not get cash consideration in the future, hence they become potential. See, when I say potential, it means that only passage of time should be sufficient to make it potential. There should not be any action from the counterparty involved. जैसे counterparty से cash आना बाकी है, that is a fact of matter which is dependent on matters which are not in my control. See, if I talk about entire 6,30,000, issue क्या होगा? You will never be able to calculate diluted EPS because there is infinite number of shares you can issue in the future जिसके सामने कंसिडरेशन आ सकता है. Yes or no? You are able to follow, Shailendra? See, in or Lavanya or Karthik or Saminathan, are you able to follow? See, when I talk about potential shares, it should not be those shares against which consideration will come in the future. That is not the objective. It is potential due to pure passage of time, nothing else, due to pure passage of time. So in the case of convertible debentures, I got the money already when I issued the convertible debentures. Now, because of passage of time, my debentures get converted into shares. That's it. There is no action required from my side. That is why it becomes a potential, it becomes a candidate for being classified as a potential equity share. But coming to options, now, if these options are there against which I am going to get consideration in the future, and suppose the options hypothetically would be subscribed at the fair value at the time of exercise. Whatever is the fair market value at the time of exercise, the holder of the option will subscribe to that. Can I call them as potential equity shares in that case?
No, sir. We
Karthik,
will get
Shailendra,
entire.
suppose कीजिए, let us suppose, for example, you are holding shares, you are holding options of Reliance, right? Options of Reliance entitles you to purchase shares of Reliance after 3 months at the fair value of Reliance equity shares on the date of exercise. Is this an instrument that Reliance can recognize as potential only because of passage of time?
No, it is dependent on the
It
consideration
is
too.
dependent on the fact that you will pay the consideration. कल को तो आप उठ के बोलेंगे ऑप्शन है, मुझे नहीं देना है, मुझे पैसे नहीं देना है रिलायंस में, I don't find worth investing in Reliance. You can always step back. So therefore, in this particular case, you will not take that as potential because it is dependent on factors not in the company's control. Are you able to follow? So that is why it is scoped out. But suppose, now I'm coming to the next suppose. Suppose you have options of Reliance which you can subscribe, which allows you to subscribe to its equity shares at 60% discount to market price. At 60% discount to market price on the date of exercise. Now tell me one thing. There are two components here. First component, you will have to give the consideration. Yes or no?
Yes.
But the second option is what? The second is there is a bonus component involved. है कि नहीं? Because you will give only 40% of the value. 60% you will get it as bonus. Yes or no?
Yes, right.
So therefore 40% हम include नहीं करेंगे because that is dependent on consideration. But 60% of the value of the options I will treat it as bonus and include it as potential, because that is not dependent on the flow of consideration from you to Reliance. Are you able to follow? Yes,
Yes,
Karthik?
sir. Right. Got it.
Okay. So basically, when we talk about diluted, and I'm very happy that you brought this topic up, because many times what happens is students think that yeah, options are going to options will be exercised and result in a cash inflow in future. So we will not consider it for potential equity shares. That thought process is not right. What is right, as Swaminathan has also mentioned in his chat, that only that portion which is the bonus component, the non-consideration component, is something that you will consider for your potential equity share calculation. Very, very important distinction that you have to take away from this discussion. Yes, are you able to follow? Okay.
Yes, sir.
Okay, fine. So that is the reason. Now in this question, you can see the subscriber is having 6,30,000 options, but he is giving money for how many options? Equivalent में he is giving money for 3,67,500. So sitting today, I don't know whether he will give 3,67,500 worth cash or not. But I know one thing for sure. If he gives this, this will go as free shares from my side. So therefore, I will take 2,62,500 as my potential equity shares to be put in the calculation. Are you able to follow? Yes, everyone?
Yes, sir.
Yes, sir.
Yes. All right. Shailendra, समझ में आ गया? Yes.
Yes, sir.
Okay, fine. Swaminathan also understood. Yes. And remember, this figure will keep on changing depending on the change in fair value. Next year, you can see it is 6,30,000 shares they will get, but he will pay consideration 70. But what is the fair value? It is 160. So how much does that come to?
275, 625.
275, 625. So what is the bonus component?
354, 375.
Yes, 354, 375. As your shares become more and more valuable, the number of potential shares also is increasing, because you are getting lesser consideration and in return you are giving more. So therefore, X7, the addition of potential equity shares would be 2,62,500. 20X8, it will be 3,54,375. But against this, will there be any impact on the earnings? Will there be any impact on the earnings? Answer is no, because this is option. Okay. So basic EPS, very simple. You start off with profit. Kitna tha profit? 5 lakh and 6 lakh. So 5 lakh and 6 lakhs. And number of shares is 40 lakhs. So 40 lakhs. So 15 paise and 13 paise respectively. Now, diluted EPS, I will consider how many shares? 40 lakh, the actual shares in issue. Potential will be 2,62,500 for last year, 3,54,375 for current year. So you add that and then do the working, 14 paise and 12 paise. Are you able to follow? Yes.
Yes, sir. Just one doubt. Will be there any need for restatement, like these two are not comparable now because bonus element is different in both
नहीं,
the
but
years?
यहाँ पे क्या होगा बेटा, the bonus element is coming into existence as a different number because of a different fair value.
Fair value, right.
ठीक है, so this is market forces and therefore I will not really need a restatement to be done. ठीक है?
Oh, okay, sir.
Okay. So that takes care of options. So options is clear. You will not consider entire 6,30,000. Only the bonus component is what you will consider in the options. Okay. All right. Fine. Okay. So with that, let us move on to the next one. Yeah, illustration 10. Okay. Okay, fine. We pick up this question. It's a simple question with multiple conversion terms. And what did I say? You will have to take those conversion terms which maximizes the shares, which maximizes the potential shares. Okay. At 30th June 20x1, issued share capital of an entity consisted of 15 lakh ordinary shares of rupee 1 each. On 1st October, the entity issued 12,50,000 rupees of 8% convertible loan stock for cash at par. Each 100 rupees nominal value of the loan stock may be converted at any time during the years ended 20x6 to x9 into the number of ordinary shares set out below. If they convert 30th June 20x6, they will get 135 ordinary shares for one loan note. 130, 125, 120. So this is the manner. If the loan stocks are not converted by 20x9, they would be redeemed at par. Okay. The written equity conversion option is accounted for as a derivative liability and marked to market through the P&L, treated as a financial liability. The change in the option's fair value reported in X2 and X3 amounted to losses of 2,500 and 2,650 respectively. It is assumed that there are no tax consequences arising from these losses. The profit before interest, fair value movements and tax for the year ended June X2 and X3 amounted to 8,25,000 and 8,95,000 respectively and relate wholly to continuing operation. Rate of tax is 33%. Calculate basic as well as diluted EPS. Okay. Fine. Now let us look at basic EPS first and then we shall move on to diluted EPS. Okay. Profit before interest, movements, fair value and taxation 8,95,000, 8,25,000. Then we calculate interest on 8% convertible loan stock. When did I issue the loan? 12,50,000 issued on 1st October 20x1, correct? And what is the year ending? June. Be very careful, be very careful. So October to June means a period of how many months? 9 months. So 12,50,000 into 8% for 9 months. So this is 12,50,000 into 8% into 9 by 12. Are we able to understand this? Yes? Tell me.
Yes, sir.
Yes. Fine. And here it will be 12,50,000 into 8%. Full 1 year. Okay. So no 9 by 12. So you can check 1 lakh rupees. And then you have changes in fair value 2,500 and 2,650. 2,500, 2,650, 792, 350 and 747, 500. Are we okay with this? Yes. Till now, is it okay? Yes or no?
Yes, sir.
Yes, sir.
All right, fine. Less tax at 33%. It will not be on this figure because they are saying that there are no tax consequences from these losses. So you will have to exclude those losses. So only on this you will calculate the tax on A minus B. So 8,95,000 in minus 1 lakh. So 7,95,000 into 33%. And 8,25,000 minus 75,000. So that comes to, I think, 7,50,000 into 33%, 2,47,500. So your profit after tax will be 5,30,000 and here it will be 5 lakhs. Are we okay with this? Yes.
Yes, sir.
And ultimately, number of equity shares, 15 lakhs. We are doing basic. So 15 lakhs. Earnings 5,30,000 and 5 lakhs. So 35 paise and 33 paise. 35 paise and 33 paise. This is your basic EPS. First part is done. Now, we move on to the next one. What do we call as convertible option? Which convertible option we have to take? We have 4 options. Yes or no? We have 4 options. This is one loan note. Total, how many loan notes are there? 12,50,000 divided by 100. 1,250 loan notes. Yes or no? If I convert on 30th June 20x6, I will get 135 shares per loan note. Here I will get 130, 125 and 120. Which one are you going to take?
It's 12,500, I think.
The first one, 135. Yes or no? Because that is going to give you the maximum number of shares. So maximum number of shares means maximum possible dilution. Yes or no? Oh, sorry,
So
20,000.
12,500.
Yes, my bad. Yeah, 12,500. So you will not consider any of these because this gives you the maximum possible dilution. 1687,500 shares. Are you able to follow? Yes? Bolo.
Yes, sir.
So now we come to diluted EPS. Year ending 30th June 20x2. Basic EPS was 5 lakh divided by 15 lakh shares. Yes or no? Yeah? Correct? Yes or
Yes, sir.
no?
Yes,
Yeah.
sir.
So diluted will start where basic EPS ends. So 5 lakh was your net profit attributable to equity shareholders. Now from here, you will then consider the diluted EPS. The diluted EPS working, you will save on what? You will end up saving interest cost if the conversion happens. Yes or no? And what is the interest? 75,000. What is the interest? 75,000. But 75,000, you have to give the tax effect. 1 minus 0.33. Are you able to follow? And on conversion, there won't be anything for fair value movement because it is already converted. So plus 2500. Are you able to follow? Yes. You will save
Yes,
interest,
sir.
and because it is converted, there won't be any mark to market movements because it is no longer a derivative, it is converted into a liability. So therefore that MTM movement goes away. So plus 2500. 15 lakh shares plus you will have 1687,500 potential shares. But will I take 1687,500 entirely? Answer is no. The loan notes were issued on 1st October. That is for 9 months. So this also will be considered for 9 months. Are you able to follow? Yes. Yes or no?
Yes, sir.
Plus 5 lakhs. 5 lakh 50 to 750. 0.20 per share. Are you able to understand? Your basic was how much? 33 paise. Your diluted is 0.2. Diluted is lower. That means this will be the reported diluted figure. Yes?
Sir, one question.
Tell me.
So basically, if I see in study material, this presentation is different. If we do this in examination, we will get the full marks, or is it okay?
You will get, because end of the day, see, if you look in the study material, this is the same part. There is no difference here. I have taken this exactly. Here also, are you getting profit of 5 lakh 50 to 750 as my answer?
Yes.
Yes. And if I look at number of shares, I am getting 2765, 625. Yes.
But
Here
sir, we
also.
have done only calculation. Like maybe their expectation is like this. This
No,
fifty
no,
would be
it's
there.
not necessary. See, study material is having a twofold what you can say, मतलब स्टडी मटेरियल का दो इंटेंशंस होते हैं. एक, they have to solve for you, and second is they should also explain. The intention behind the study material is to keep it self explanatory as far as possible, because you as a student are going to study the study material, but in your exam you need not write this, because when you are actually calculating, that itself will give you the proof that whether it is dilutive or anti-dilutive, you can conclude from your final answer. So you don't have to write this. It's not required.
But sir,
This,
ideally, in suggested answer also, मतलब, institute should publish only to the point. मतलब, if we follow suggested answer also, examiner
hmm,
they write everything like A to Z
hmm,
everything. So maybe not
hmm,
required. But
hmm.
for us, like we think like we have to follow everything.
No, I think basically I understand where you are coming from, but if you are covering, see, my solution has covered all the basic points. कुछ कुछ चीजें लिखो, जैसे फॉर एग्जाम्पल अभी मैंने सिर्फ इतना किया है, बट व्हेन आई वाज एक्सप्लेनिंग टू यू आई टोल्ड यू टू इग्नोर द, अभी हमने कन्वर्जन ऑप्शंस, व्हेन वी टुक द कन्वर्जन ऑप्शंस, we have ignored these three. Yes, we have not considered these three. We considered this. Why did we consider this? We considered this because this is the maximum possible conversion and therefore maximum possible dilution. So this one assumption you will have to write it down. You make an assumption, but you do not write it in the answer. That becomes a problem. that becomes a problem. Your assumption is 100% right. You have to express it. Answers, presentation can be a little here and there. Now, it's not necessary and it's not humanly possible to maintain exact to exact presentation. I don't think institute will be unfair to that extent. Okay. But yes, any assumptions you make, please back it with a note in writing. So you will have to mention we are considering the first conversion ratio because that is maximizing the potential equity shares, resulting in maximum possible dilution, if any. Okay. And then that is the first note. Second note, you will have to mention fair value losses are not considered for tax, which is already given in the question. Even if you don't give that, it's totally fine. Okay, if you give these two notes, it is more than enough for you as far as your exam is concerned. It's totally fair. Okay, it's totally fine. You are covering in your solution, you are showing clearly 75,000 you have added. You are showing 2,500 you have added. You are showing 1687,500 shares you are considering, but only for 9 months based on the number of months it is in issue. So I don't think that anything is left out for the examiner to deduct any marks in this particular case. Okay?
Okay, sir. Thank you.
So in that sense, I feel, yeah, it's totally fine. We can go ahead with this presentation. Okay? Yeah. Coming to year ending 20x3, your diluted EPS starts where basic EPS ends. Okay. So here plus. This will be 1 lakh because now you will consider it for the full year into 1 minus 0.33 plus 2,650. This is the fair value movement which will no longer be there. And here you will consider 16,87,500 shares for the complete year. So when you consider this, it comes to 5,99,650 divided by
31,87,500.
31,87,500. 31,87,500 shares. So that gives you how much?
0.19.
0.19. Okay. And then when you compare with the original number, it was 35 paise, right? It was 35 paise. So 35 paise was basic, 0.19 per share is diluted. Diluted is less than the basic. So this will be your reported diluted number. Is it okay? Yes?
Yes, sir.
Any doubts? Shailender, Karthik, Saminathan? Yes?
No, sir.
All clear? Okay. Okay. So that takes
Sir,
care
one
of.
last
Tell
doubt.
me,
So
tell
what
me.
like nowadays, like papers are checked by other than chartered accountants also. So institute is giving them the suggested answer first to give the answer, because we see like tech is used, because when we get the answer sheets, there is
Mm-hmm.
like there is technology we are using. So
Acha.
there is risk like how they are calculating. Like we have seen generally like they put wrong marks, like said ki wrong, no, we will not give any marks. Well, I think
Hmm.
like all we are using AI for getting our answers checked also.
Uh, Honestly, examination department के साथ, see, we are, as far as certain faculty like myself and other people are concerned, we are
But
only
nowadays, sir,
concerned.
they are checking online. Na? There is no hard copy. Na? Soft copy only
हाँ,
they are taking.
that is there. Online ही checking होती है. That much I can tell. But which tools they are using, whether they are using any tools, who evaluates that, I am not the right person who can comment on that. वो मुझे नहीं पता अभी तक, because my even my exposure with the institute has been only to the board of studies academic. Examination department is totally different. उनके साथ we don't interact or we don't know what is there. That is so that I think I may not be the right person to answer. हम तो external faculty है.
So
So
what I understand, sir, ki because on stepwise marking, their
हम्म,
expectation level is bit high. They want to compare with suggested answers. Are we going in right step or not? Accordingly, they are giving the marks.
I agree, but at the same time, I would also like to point that stepwise marking, abhi steps will only be vertical, is not mandatory. Step can be horizontal also. जैसे ये मेरा एक स्टेप हुआ, ये मेरा दूसरा स्टेप हुआ, इंस्टीट्यूट के सजेस्टेड में इट इज इन अ हॉरिजॉन्टल मैनर, इट इज इन अ हॉरिजॉन्टल मैनर. In the case of our presentation, sorry, institute के केस में it is in a vertical manner, हमारे केस में it has gone in a horizontal manner. Totally fine. Even a person who will evaluate will definitely understand that we have chosen to present this. And see, the other point is coming to in the examination hall, it is not only important to follow all the steps chronologically in that sequence, in that manner, vertical hai to vertical, because you are also having intention to save time. आप अगर सारे steps if you write in the vertical manner with all narrations, explanations, everything, you may end up losing time for the other questions. Because this case, see, today I have explained, that is why it has taken a lot of time. Otherwise, if you do it, maybe within 5 minutes, your question gets over. And this question could be something like 6 to 8 marks in your question paper. So therefore, considering that, you will have to decide the best manner in which you can present. And then I'm sure those who evaluate, they will not ignore the fact that the student has made an effort to present the steps. You don't have access to the suggested answers ना. Suggested answers कब आते हैं आपके पास? पेपर लिखने के बाद, right? So I'm very sure that they will be considerate when they look at the manner in which you have written. It's not enforceable per se. I don't think so. So in that sense, I would like to give students the benefit of doubt, saying that present all things with clarity. Wherever you are making an assumption, please write that assumption. And I think that should be fair enough for you to go through, okay, to sail through and get good marks also. I'm not saying just saying 40, 50, 60. With this much, you can definitely go forward and get even higher numbers. Okay, it's more than enough. But always remember, जब आप एग्जाम में लिखते हैं, mention the fact that whatever assumptions you have made, write it down. If you know that alternative solutions are possible, at least mention that. We have assumed this. However, if assumptions change, alternate solutions are also possible. कई questions में होते हैं. These are professional examination questions, right? You may have different thought processes that can come out depending on how you interpret the questions. Okay. So in that regard, alternative solutions will be possible. Mention that. Okay. And many times institutes, examination department or the person evaluating will also be aware of the interpretations that students make. Okay. So in that sense, I think you can expect reasonableness in the evaluation. Baki, how they evaluate, which tools they use, I'm not an evaluator personally, so I'm not aware of it. Okay, but yeah,
Thank,
as far as I
thank you.
know, it's online now. फिर papers physically जाते नहीं हैं अभी. Okay. That is why I think you are mandated to write in a black colored pen, right? अभी आपको black pen से ही answers लिखने हैं. हमारे टाइम पे तो ब्लू चल जाता था. Now they are insisting on black because scanning वगैरह में it becomes easy. Okay. Yeah. So coming to that, that closes your EPS, diluted EPS. Now, when we look at presentation, where do you present your EPS? It is a very important metric. Okay. वो किसी notes में hidden नहीं होगा. Notes में calculation will be there. Explanation will be there. But the EPS as a figure will appear on the main profit and loss. जहां पे आप statement of P&L present करते हो, वहीं पर you should also be presenting the basic EPS and the diluted EPS. That is the level of criticality that is assigned to this particular figure. The investors, what you call those who analyze the financial analysts, the regulators, everybody will have access to the EPS as one of the major numbers in the financials, and that is why it is placed right on the face of the P&L. Now when you calculate your EPS, आपको तो पता ही होगा हमारा P&L में we have two parts in the P&L. Which are those two parts? Our P&L has two parts, right? Which are those two parts?
And OCI.
P&L and OCI, absolutely. So when I calculate my P&L, when I calculate my EPS, it will always be with reference to the P&L wala portion, right? It will always be with reference to the P&L portion, okay? Because the OCI ultimately is items which go to the reserves, okay? Ultimately, those are those items. Typically, market value movements, etc., go in your OCI. Generally, the way I look of as OCI is items which typically do not remain in your control, strictly speaking. Fair value movements. It's not in your control. Revaluation. Again, it happens with reference to fair value, not in your control. Actuarial assumptions change. Demographic changes. What you can say, financial assumptions change with reference to employee benefits. These 2-3 changes, for example, they are not in your control. So typically they go and sit in your other comprehensive income. So वहां पे बैठे रहते हैं. So normally EPS we don't focus on that. It is done with reference to your P&L wala figure. Yes. Now in your P&L also, there are two parts. कोई बता सकता है कौन से दो पार्ट है उसमें?
Income from continuing operations and discontinued operations.
Yes. Continuing operations and discontinuing operations. Your total operating P&L जो है, other than OCI, comes broadly under two types. One is operating P&L, one is profit or income from continuing operations. One is income from discontinued operations. So this gives you total operations. Now, I will calculate the EPS with reference to total operations always, number one. Now just listen carefully. When I report my basic EPS and diluted EPS, you have to ensure that diluted EPS is always lower than the basic EPS. Ensure matlab calculation जो figure देगा, you have to just check whether it is lower than basic. जैसे I checked in the previous question. If it is lower than basic, you can report that as diluted EPS. If it is not lower than basic, then you cannot report that as diluted. The name only suggests diluted EPS means it is something which has become lower in value as compared to the basic. तो वो EPS value कम होना जरूरी है. It is necessary for it to be less. Okay. If it is not less, then you will say that diluted EPS is equal to basic EPS. Are we clear with this part of explanation, everyone? Yes?
Yes, sir.
Karthik, Shailendra, Saminathan, yes?
Yes, sir.
All right. Now I move on to the next one. Even in the basic and diluted EPS, it is essential that your diluted EPS from continuing operations is lower than diluted EPS from it is essential that your diluted EPS from continuing operations is lower than the basic EPS from continuing operations. Okay, so if I put it in writing, see, I have total operations. Okay, these total operations comprise of continuing and discontinued operations. Correct? Now, what is important is this basic EPS should be greater than diluted EPS at this particular stage. This is important. If this condition is met, then even if basic EPS is greater than diluted EPS, it is acceptable. Are you able to follow? If this is true, one second, wrong sign. Even if diluted EPS is greater than basic EPS from total operations, it is fine, provided my diluted EPS from continuing operation is lesser than the basic EPS from continuing operations. Are you able to follow this? Yes? Yes?
Sir, please explain it once again, sir.
Okay. See, sometimes I'll give you some numbers. I don't want to do the question because that question is too long to explain. Okay, sometimes it is possible that, see, my basic EPS is 10 rupees per share and my diluted EPS is 7 rupees per share. So basic is more than diluted for continuing operations. You can report this. No problem. Is it okay? This part you understood?
Yes, sir.
Suppose, I'll just give one more example. Second case. If this is 10 per share and this is 12 per share diluted, will you report 12 per share as diluted EPS? Answer is no. You will not. You will restrict it to 10 per share. Are you able to follow now? Yes.
Yes, sir.
So this is the first case. First point is continuing operations, diluted EPS should always be lower than basic. If not, it will be equal to basic. That's it. That is the first part. Now, if this condition is met, then on a total operations basis, if basic EPS equals rupees, let us say 12 per share, and diluted EPS, let us assume, is rupees 13 per share. If this condition holds true, then you can go ahead and report this. You can go ahead and report, even though on a total level, diluted EPS is more and basic is more, you can still report it because this is your control number. This is your control number. Are you able to follow now? Yes?
Yes, sir. Yes, sir.
Why can I do this? Because what happens sometimes when we talk about discontinued operations, you may have certain assets pertaining to those discontinued operations which you would sell. And because you are selling off those assets, you are having a very high profit that comes from sale of those assets. So it is possible that you may have certain, what you can say, you may have certain profits that get shifted to your discontinued operations. Okay. So the distortion that happens at this stage, the distortion that happens here is purely on account of discontinued operations. It is not on account of continuing operations. So if your continuing operations is there as a normal EPS where diluted is lower than basic, stick to that. Do not be worried what is the case for total operations. Are you able to follow? Yes,
Yes, sir.
sure. Karthik, Shailendra, Swaminathan. Yes,
Yes.
Yes, sir. Got it.
ठीक है. So that takes care of that part. All right. Now, next. One question is there where it is based on Ind AS 109. Because so far we saw questions where it was written Ind AS 109 not applicable, assumed it is not done. तो वैसे कर लिया था. But there is one or two questions where it is there. Yes, this is the one. Okay. See, an entity issues 2000 convertible bonds at the beginning of year one. The bonds have a 3-year term, issued at par with face value 1000 per bond with total proceeds of rupees 20 lakhs. Interest payable annually in arrears at a nominal annual interest rate of 6%. Each bond convertible anytime up to maturity into 250 ordinary shares. Entity has an option to settle the principal amount in ordinary shares or in cash. Entity has the option. It's not at the option of the holder. It is at the option of the entity. When the bonds are issued, the prevailing market interest rate for similar debt without a conversion option is 9%. Institute will never tell you directly to follow Ind AS 109. Institute will give this particular sentence. It is the biggest hint that says that, boss, you have to apply Ind AS 109 here because you are having fair value interest rate given, market rate of interest given for similar non-convertible instrument. Yes, if this line is there, please treat it that you have to follow Ind AS 109. At the issue date, market price of one ordinary share is rupees 3. Market price of one ordinary share is rupees 3. Income tax stands ignored. Entity has accounted for the convertible instrument using the principles of financial instruments. Here, Institute has been generous and given this in the question. Even if it was not given, because market rate is given, you have to follow the financial instruments principle. Interest at 6% for the year has already been adjusted in profit attributable to shareholders. Calculate basic and diluted EPS when profit attributable to ordinary equity holders is 10 lakhs, ordinary shares outstanding 12 lakhs, convertible bonds outstanding 2000. All right. So your 20 lakh worth of bonds, 2000 into 1000. So that is 20 lakhs. That 20 lakhs we will be splitting into liability component and equity component. You have studied financial instruments, right? So when you have studied financial instruments, you would have done the split. Yes or no? Split accounting padha tha aapne, you remember?
Yes, sir.
Yes. So when you used to do that liability based accounting, you would typically determine what is the using the rates given, Using the rates, you will determine what is the liability component, what is the equity component. So, liability component, it represents present value of interest discounted at 9%. So 1,20,000, 20 lakh into 6%. This is 20 lakhs into coupon rate of 6. Payable annually in arrears for 3 years. So 1,20,000 at the end of year 1, 1,20,000 at the end of year 2, 1,20,000 at the end of year 3. You will discount these three cash flows to present value. That becomes the liability component. Rupees 20 lakh is assumed to be settled in equity since option is with the entity and will not form part of the liability. So यहाँ पे the institute has given its assumption. The institute has given its assumption. See, it is an instrument which is a convertible instrument. I have taken money, I have issued a convertible instrument, but that convertible instrument is convertible at my option. My option of the issuer, not option of the holder. And I have assumed that I will settle it in equity. Question में किधर भी नहीं दिया है. Question has not given whether it will be settled in equity or not. The solution says that since it is with the entity, it will not form part of the liability. It will be settled in equity, which is fair enough. आप ले सकते हो. But I just want to point out that alternative is also possible because an entity may say, if I have cash, why do I want to issue more equity? I will go for even settlement of the liability in cash. I will go for even settlement of the liability in cash without a conversion. So my only submission is alternative is possible, but what institute has done here is not wrong. It is right. They have given the assumption. Is it okay? Yes. So they have assumed 20 lakh to be settled in equity. So 20 lakh into the present discounting factor. So that gives you 16 lakh 96. So 20 lakhs comes to be your total value. Okay, this is determined. This will be your, sorry, this will be your balancing figure. This will be. Are we okay with this? Yes, are we okay with this? Split is okay?
Yes, sir.
Have you want to see the calculation? We can do that. Okay. It's not going to take much time. Year 1, 2, 3, discounting factor at 9%. How much is it? Zero 0.8417. That is the annuity factor. Annual cash outflow 20 lakh into 6%, 1,20,000. Therefore, is equal to 303,756. Are we okay with this? Yes.
Yes, sir.
So 303,755, 1 rupee, and this is the balancing figure. So total 20 lakhs are there. So 16 lakh 96, 245 or 244. This becomes your equity. Now, what have they done? The liability and equity components would be determined. The amount assigned to the issuer conversion option is an addition to equity and is not adjusted. Basic earnings, it is already included as part of profit attributable to ordinary equity holders. They have given this. Interest is already adjusted. So therefore, 10 lakh is your profit and divided by 12 lakhs. So 0.83. 0.83. When I talk about potential equity shares, now it is assumed that diluted earnings, it is presumed that issuer will settle the contract by the issue of ordinary shares. If that is the case, the dilutive effect is calculated in accordance with the standard. So how many equity shares will you issue? 2000 into 250. 2000 into 250 gives you 5 lakhs. So this is 5 lakhs. 2000 into 250. 5 lakh shares. And what is this 27,338? How did you get that? That is nothing but the first year's finance cost. 303,756 into 9%. 303,756 into 9%, giving you 27,338. Are you able to understand this? Yes?
Yes,
Yes,
sir.
sir.
Sir, if we consider the other way, then this amount will be as per that amount, no, sir? 18
Definitely,
lakh.
it will change. It will change. Yes. So if you
Yes, sir.
consider the other way, what will happen is your liability component will be this one plus 20 lakhs because you will settle it in cash, right? 0.7722. So that will get added. So you will have 20 lakhs into 0.7722, 15 lakh 44,400. So your total liability component will be 18 lakh
1848, 122.
48,150. 192, 156,
Yes,
whatever
sir.
you get. Okay. And
Yes, sir.
your, yes. And your first year's interest will be 1,66,334. Okay. If you take that as the liability part. Is it okay?
Yes, sir.
Yes. All right. And equity will be some 1,50,000 के आसपास रहेगा. ठीक है? Yeah.
Yes, sir.
So that takes care of financial instruments implications. Okay. And then the last part we come to contingent shares. Okay. Contingent shares. What do you mean by contingent shares? Shares which are issued subject to fulfillment of a particular condition. Shares which are issued subject to fulfillment of a particular condition. Now, when I talk about contingent shares, will it affect my basic EPS? Will it affect my basic EPS? Answer is no. Because basic EPS depends on things which are actually existing. Yes or no? Basic EPS, do I assume anything?
No, sir.
No. It depends on actual facts. आपने issue किया, condition meet हुआ तो issue किया. If it is not met, you haven't issued. Profits are earned, actually earned. So all these things are dependent on what we call are your basic EPS. No assumptions. It's purely factual. So basic will not get impacted. Will it impact my diluted EPS? Shares which are issued subject to fulfillment of conditions. Do they represent potential shares? Answer is yes. They represent potential shares. Now, if they represent potential shares, then how am I going to consider that? Do I become an astrologer and forecast that in the future I will meet the condition? Answer is no. You don't have to forecast. You will just include in current period computation. You will just include it in current period computation only if the shares are issuable considering the current period to be the end of the contingency period. Your contingency period may end after 5 years. But for the purpose of diluted EPS, you will assume that current period is end of the contingency period and work on deciding whether they have to be considered as diluted or whether they have to be considered as potential or not potential equity shares. That is the first thing. Second, from when will I consider the time? From when should I consider potential shares? They will be considered to be included from the date of the contingency share agreement or from the beginning of the year, whichever is later. This is the second condition. First condition क्या था? Current year will be treated as end of the contingency period and accordingly they will be included in the number of potential shares. Number two, potential shares are to be included from the date of the contingent share agreement or the beginning of the year, whichever is later. Number two. Number three, prior period statement is not required. Suppose today, based on the facts today, I assume that it is there. Next year, it was not there. Do I do a restatement next year? Answer is no. It is just a change in circumstances. It is not due to any error that you are getting a different number. So that is totally fine. No prior period restatement is needed. Are you able to understand this? Yes. Are you able to follow?
Yes, sir.
The conditions for diluted EPS. What is the first condition? Shares are to be included at the end of current period as if current period is end of the contingency period. Second, potential shares to be included from which period? From the contingent share agreement or beginning of the period, whichever is later. And third one, prior period restatement is no longer required. So that is the three things for diluted EPS. Basic EPS, very straightforward. It is not having any assumptions about the future. It is purely factual. And therefore, shares will be included if the conditions are fulfilled. So that is all that you have for contingent share agreements. Yes. One.
Sir,
Yes.
if in the current reporting period contingency is met, sir, then shares will be issued, no, sir, for that.
Yes.
Then,
So that will come as basic.
then
See, in
for the period for which they were contingent, do we need to consider that in diluted EPS, sir?
no, see, if it is met in the current period, it will go to basic and diluted, you will not have it only, no? Because now it is no longer potential, it is actually issued, right?
Yes, sir.
Yes.
Yes, sir.
So just a minute, let me see where is the question. Not this one, this one. Shares, purchase options. One second. Shares.
So I think it's illustration 12.
Illustration 12. You have done it in your class?
I don't remember it. I just have book in front of me.
Acha, acha. Okay, yeah, this is the one. Yes. Have you studied it? Because I have not taught you in DS 33. I was not there around that time. You have done illustration 12? If you have not done, we will do it. It will take little time, maybe 15-20 minutes, but I think it's totally doable. Okay. See, you have ordinary shares outstanding 10 lakhs, no options, warrants or convertible instruments. Acha hai. An agreement related to a recent business combination provides for issue of additional ordinary shares based on the following conditions. 5,000 additional ordinary shares for each new retail site opened during 20x1. It is just opening of the site which is essential. Uske baad whether the site is there, not there, closed, demolished, destroyed, bulldozer चला दिया, कुछ भी हो, not considered. Okay. Open हुआ, 5,000 shares will be given. And this is 5,000 shares without consideration. Okay. It is 5,000 shares without consideration. Okay. 1,000 additional ordinary shares for each rupees 1,000 of consolidated profit in excess of 2 lakh, in excess of 20 lakh for the year ended 31st December 20x1. Retail sites opened during the year, one on 1st May 20x1, one on 1st September 20x1. Consolidated year-to-date profit attributable to ordinary equity holders 11 lakhs as of 31st March 20x1, 23 lakhs as of 30th June, 19 lakhs as of September x1, including 4,50,000 loss from a discontinued operation, 29 lakhs as of 31st December 20x1. Calculate basic and diluted EPS on quarterly as well as annual basis. Okay, fine. So first what we will do is we will calculate on an annual basis. Okay. This is illustration 12. This one is slightly important, so you can just note down. Okay. Basic EPS. Basic EPS. Okay. What is your basic EPS? What is your total profit? 29 lakhs, right? So 29 lakhs divided by, all right. How many shares are there? 10 lakh shares at the beginning of the year. Yes or no? Plus, you opened a store on 1st May 20x1. Yes, उसके लिए आपको कितने शेयर मिलेंगे? You will get 5,000 shares. So plus 5,000 shares. For these shares are actually there for a period of 8 months. Yes or no? Plus another 5,000 shares on September, October, November, December. So 5,000 shares into 4 by 12. So that's it. And profit condition is met. More than 20 lakh, did you earn the profit? Yes. But will the shares be issued by 31st December 20x1 or will it be issued afterwards?
Afterwards.
Afterwards. Basic is concerned with what is already issued. This is not issued. So therefore it is 0. So when I calculate this, what will be the number of shares in issue? 29 lakhs divided by 10 lakh, 5,000 shares. So rupees 2.89 per share. Are we okay with this? Yes.
Yes, sir.
Any doubts here so far? Particularly for this nil, I hope we are clear everybody, because tomorrow everybody will start asking profit तो 29 lakh कमा लिया फिर इसको zero कैसे पकड़ा? Yes. That will be issued in the next year because profit determination happens only in the next year. Even assuming everything is ready, assuming you get your balance sheet audited and signed on 1st April, even then your profit. So shares will be issued only after 1st January in this case. So up to 31st December, there won't be any issue of shares. So basic EPS में वो nil ही रहेगा. Yes. Now when we talk about diluted EPS, 29 lakhs. Okay. Now 10 lakh 5,000 shares. This is from basic plus. Acha, 5,000 shares came into existence on 1st May. Yes, 5,000 shares came into existence on 1st May. Can I say that between January to April they were potential? Can I say that between January to April they were potential? Yes or no? Yeah.
Yes, sir.
So 5,000 into 4 by 12. Another 5,000 shares came into existence on 1st September. So can I say from Jan to August they were potential? Yes or no?
Yes, sir.
These are shares which are actually issued in September. That means they were potential for the first 8 months. So 5,000 into 8 by 12 plus. Will I have potential equity shares due to meeting the profitability condition? Answer is yes. Because what is the profit condition? 20 lakhs. 1,000 shares for each 1,000 of profit earned above 20 lakhs. मैंने कमाया, I have earned a profit of 29 lakhs. Out of 29 lakhs, 20 lakhs is the cutoff. So I have earned 9 lakh more. So I will get 9 lakh shares. And these are potential for the entire period. Yes or no? Did you follow? Yes? Did everyone follow?
Sir, if here profit is less than 20 lakhs,
Did not
then we
follow
don't
this?
consider this, sir.
You will not consider. Did everyone understand this 9 lakhs? Anybody who has not understood this 9 lakhs? This 9 lakhs is nothing but your profit earned is 29 lakhs, which is in excess of 20 lakhs. For every 1,000 rupee share, you will issue, for every 1,000 rupee profit, you will get 1,000 rupees worth of the share. So that is equal to 9 lakh shares. You able to follow? Yes. Karthik, Shailendra.
Yes.
Yes, sir.
Okay. Okay. 29 lakhs divided by this comes to 5,000, 9 lakh, 5,000. So that gives you rupees 1.52 per share. Is my diluted less than basic? Basic कितना था? 2.89. Is my diluted less than that? Answer is yes. Report the diluted number 1.52. Are we able to follow? Yes.
Yes, sir.
All right, fine. What I want you to do is, I did the annual. You got an understanding. Now I want you to do this on a quarterly basis. On a quarterly basis. Each quarter, you assume it to be part of a single. Each quarter, you assume it to be part of a single reporting period. उस हिसाब से you do the working. Like for example, profit for a year is, for a quarter is, let us suppose 22 lakhs. Then 22 lakhs means 2 lakhs will be the bonus shares that you will consider in line with the last condition, right? So for that period you will consider. So each quarter will be treated as a separate reportable period Accordingly, you do the basic and the diluted EPS calculation. Are you okay with this? Yes? Are you okay with this? Any doubts? Any doubts?
Clear, sir.
Swaminathan, Karthik, Shailendra? Yes, no doubts. Try this. Try this. Tomorrow we are again meeting. So tomorrow's session on Ind AS 19 is relatively small. After that, if you have any issues in this question, we can address it tomorrow. But it will be more interesting if you do this question today. Okay, only then it will be fine. Is it okay? All
Yes.
right. So I think with that, Ind AS 33 is done. We have covered basic, we have covered diluted, bonus, right shares, options, then Ind AS 109 implications, contingent shares. I think we have covered all the basic concepts, advanced concepts that you had. Okay. So thank you so much, and see you guys tomorrow. Ind AS 19, we'll do a couple of questions, and I think you should be fine with that as well. Okay. All right then. Thanks. See you everyone tomorrow.
Thank you, sir.
Thank you,
Thanks.
sir.
Okay, sir. Thank you so much.
Thanks. Thank you. Thank you. Session done? Yes, yes. Thank you. Have a nice day. Thank you.